Hi, everyone. I'm Brad Macdonald, broker with Remax, and today I'm diving into what's really happening in the Greater Toronto real estate market. We're heading into the fall of 2025, and there's a lot of mixed messages out there. Interest rates, price changes, and plenty of headlines about uncertainty. So today I want to break through the noise and give you a clear, honest look at what I'm seeing today across Markham, York Region, and the GTA, and what's changed, what hasn't, and what it means if you're thinking of buying, selling, or investing. So let's start at where we are right now. After a few years of ups and downs, the market has finally started to stabilize. The Bank of Canada has kept rates steady through the middle of 2025, finally making a modest cutback in September of 0.25%. Borrowing costs are still higher than we'd like, but buyers and sellers have adjusted to this being the new normal. Across the GTA, home sales have picked up slightly compared to the summer. Inventory has remained steady, giving buyers choice. So prices are holding fairly steady. Average home price across the GTA is still just under 1.1 million. Here in York Region, it's a bit higher with detached homes in areas like Markham, Richmond Hill, and Aurora, averaging between 1.3 and 1.6, depending on location and condition, of course. So what does that tell us? It's a balanced market, maybe slightly leaning towards a buyer's market. And that balance creates opportunity for anyone really willing to make a move. So if we zoom in on our own backyard in Markham, Unionville, York Region East, it's what I call a thinking person's market. Buyers are taking their time, doing their homework, and looking for real value. We're not seeing the wild bidding wars of 2021, but good homes, the ones that show well and are priced properly, are still selling, albeit not quickly. The average days on market for detached homes in this area is about 25 to 30 days. That means sellers need to be strategic, but well-prepared listings do move. Neighborhoods like Cornell, Wismar, and Unionville continue to perform well thanks to family-friendly communities, strong schools, great transit, awesome restaurants. Over in Vaughan's metropolitan center area, condos remain popular with those value being near the subway and employment hubs. Rental demand in York Region is still strong as well. Multiple offers on high-quality rentals are common, and vacancy rates are reasonably low. So even though prices aren't skyrocketing, investors are seeing solid rental income and long-term growth potential. So let's talk about strategy, because success in real estate always comes down to having a plan. For buyers, the biggest mistake I see right now is waiting for a crash that probably isn't coming. If you can afford the home comfortably and it fits your long-term goals, don't try to time the bottom. Focus on securing financing that works for you. Maybe that's a short-term mortgage or rate buy down, but when rates drop later, you can refinance. But by then, maybe prices have already moved up again. For sellers, this is a market where strategy beats luck. Homes that are move-in ready, well-staged, priced realistically are selling. But buyers today are cautious. They know quality when they see it. This means professional photos, video tours, really strong online marketing are more important than ever. Your agent needs to be effective with positioning your home to stand out and not blend in. For investors, the fundamentals remain solid. Strong population growth, limited supply, high rental demand. Multi-generational and multi-unit properties are performing especially well because they offset carrying costs and build long-term equity. This is not a quick flip market, but it's an excellent time for patient investors focused on cash flow and stability. So looking ahead, what's next as we head towards 2026? Most experts were expecting Bank of Canada to continue slowly lowering interest rates. However, recent inflation numbers released this week may curtail another rate cut until the winter, with more to follow in the spring. That means the next few months could be a smart window for buyers to make a move before spring competition heats up again. Historically, these late-year markets have less competition and quite motivated sellers. Looking further ahead, our population growth, immigration, limited new housing supply will still keep demand strong throughout the GTA. So no, the market's not crashing, it's correcting. It's finding the balance and a stability that's a good thing for everyone long term. So that's your quick snapshot of what I feel is really happening in the market this fall. Steady, strategic, and full of opportunity if you approach it with the right mindset. If you're thinking of buying, selling, or investing in Markham or York Region, I'd love to connect. I can give you a no-pressure update on your neighborhood or plan your next move based on your goals. You can reach me anytime at themacteam.ca or find me on Instagram at Homes Resource. Until next time, I'm Brad Macdonald, and remember, in real estate, good information beats good timing every time.